Um, Welcome everyone once again to dollar presentation by Afrinvest. Things to know before making a dollar investment. So I'd like to welcome the people that are just joining us. So what we're going to be doing is introducing you to dollar-denominated Eurobond dollar-denominated investments. Let you know the benefits and just to let you know the different types of investments available. So first of all, there are factors to consider when you want to make an investment. Before making any form of investment, there are critical questions you must ask. Number one critical question is, what are your investment goals? So what are you trying to achieve? Is it travel? Is it education? Is it just to build wealth? Is it that you want to buy a car? So you have to have a goal, right? And your goal is very important in making your investment decision, whether it's a short-term goal or a long-term goal. The second thing is the safety. So even though you have a goal of what you want to achieve, you have to ensure that whatever you are getting into is a safe investment, if possible, an investment that is regulated, so that if there are any issues, you can know how to protect yourself. I mean, there are people that did investments like MMM in the past that was not regulated, was not safe, and they lost a lot of money. So safety is very important. Liquidity need is also very important. So you have to understand how liquid your investment is. You don't want to buy an investment, you don't want to get into an investment whereby at the end of the day, you cannot withdraw when you need your money because maybe there's a clause or because it's an illiquid investment. So you need to understand how liquid the investment is. And number 4 is your risk appetite. So for some of us, if we lose money, we can still sleep that night. For some people, they can't lose money, right? So you have to weigh in what risk are you willing to take? Are you a low risk person? Are you medium risk? Are you high risk? So your appetite matters in making your decision. So why dollar investments? Number 1 is because of inflation hedge. Dollar investments help you to hedge against inflation, and in my subsequent slides, you see information on that. Also, devaluation hedge. I also have a slide that talks about the devaluation of the Naira historically. Taking care of your foreign exchange needs. So there's travel, there's education, and things like that. So whatever need that you have in dollars, it would be best to have invested in dollars so that you are matching your need with your investment. And number 2 is the diversification benefits. So when you have a diversified investment, it means that you have concentration risk. So not all your investment is in Naira. It's good to have some in dollars. So now this is an interesting chart. It talks about the inflation difference between the Naira and the dollar. So between 2010 and now, the highest inflation rate of the dollar has been 3%. So that means that if you had $1,000 in 2010, today that $1,000 will be worth $830. But the interesting thing about Naira is that if you had 150,000 Naira, which was equivalent to $1,000 in 2010, and you put it under your bed, right? You maybe didn't invest it in anything, you just left it as it was, or you put it in an account that does not earn any interest. By today, that money will be worth 37,000. So even though you are holding the same 150,000 in your hand, the purchasing power of that 150,000 would have dropped to 37,000 because the Naira inflation rate has been on an average of around above 10% for the past 10 years. It peaked to as much as 16% in 2017. So I'm even talking about if you had dollars and you put it under your bed, at least you still have $830 if you had 1,000. But if you had Naira and you put it under your bed, unfortunately, it will only be able to buy things worth 37,000 Naira today because of inflation. Then another thing is the exchange rate chart. So as I said, in 2010, the Naira to dollar rate was 150 to 1. So that was about 150,000 Naira if you needed 1,000. If you needed, if you needed $1,000. This is, sorry for the error. If you needed $10,000, you would have had, it was 1.5 million Naira in 2010. So $10,000 was 1.5 million Naira in 2010. So right now, that same 1.5 million Naira, if you want to convert it to dollars, is just $3,000 right now. If you went to an Abukina and you said, I have 1.5 million, I want to convert it to dollars, it's $3,000. Or if you have 150,000 Naira, which was equals to 1,000 in 2010, that will give you just $333. So Naira has lost value by about 200% to the dollar in the last 10 years. So, and why dollar investments are important is that if you have been investing your dollars for the past 10 years, you would have protected yourself in two ways. Number one, inflation is less. And number two, the devaluation of the Naira, you would have protected yourself from that. So we can't go back in time. And that's why we're here to talk about what the future holds for you. So different types of dollar investments. We have bonds, which are usually called Euro bonds. Typically, their tenure are medium to long. So you find Euro bonds that do, most of them are above a year. So 3 years, 5 years, to as much as 30 years, 50 years, you know. And they're highly liquid. So they are easy to sell. For stocks, they are usually short-term investments, or for some people, they hold stocks for a long time. The risk level is medium to high, and the liquidity is also high. So for stocks, they are also easy to sell if you want to sell. For alternative investments, like the likes of currencies, for some of us that do Forex trading, likes of artwork and things like that. So they differ. Some people hold them for short periods, like currency trading. People do a lot of active trading when it comes to currency, that's FX trading. If it's artwork, people hold it for longer periods. And the risk level of these investments are typically high risk, and liquidity depends on what exactly you're investing in. So if it's currencies, they're highly liquid. If it's things like artworks, they are not as liquid. Then we have mutual funds. So mutual funds are usually short-term, and the risk rating of a mutual fund depends on what the mutual fund is investing in. But I'm going to spend most of my time talking about Euro bonds, and that's because they are more regulated, because they are easily accessible, like they are easily accessible amongst different investment houses, whether it's Afrinvest or any other person that you want to invest in. There are also a lot of entities that are local players that have Euro bonds. So we have banks like UBA, like Access Bank, that have Euro bonds, and then Nigeria also has Euro bonds. So it's easy for you to analyze your risk when you are dealing with local principals, and it's totally a foreign investment. So for Euro bonds, what are Euro bonds? So a Euro bond is a dollar denominated bond. And typically a dollar denominated. There are different types of Euro bonds, but for the context of this presentation, Euro bonds are dollar denominated bonds. There's another slide that is going to describe some of the features of Euro bonds so that you understand them better. But for a Euro bond, the coupons are paid twice a year, and they are usually fixed. So for example, if the federal government of Nigeria needs money, federal government of Nigeria can say they want to borrow money from Mr. Rotimi, for example, and they say they need $1 million for 10 years at a fixed rate, which is, for example, 10%. So what happens is that at maturity, your principal is paid back. For every 6 months, the interest is serviced. So if it was a 10% bond, it means that it was $1 million. So that means the entire interest is $1,100,000 per year, which is paid twice a year as 500,000 50,000 and 50,000 twice a year, right? So the coupons are usually fixed and they are paid back annually, and the face value is paid back at maturity. The benefits of Eurobonds are, number one, preservation of capital. If you hold your Eurobond to maturity, it means that you earn your principal is relatively secured. It hedges against local currency volatility. Right now in the market, if you go in for a direct purchase of a Eurobond, you get yields above 9%, which is quite considerably good when you compare it to Naira investment. So Federal Government of Nigeria, Eurobond, for example, their 1 year Eurobond is doing about 9% yield, while 1 year Treasury bills are doing like 4%. So that's why it's more. And then for Eurobond direct purchases, you need $200,000. So key terms of Eurobonds. So we have the issuer. So the issuer is the borrower. So like I said, Federal Government of Nigeria is the one that wants to borrow money, while the bondholder is the lender. So the person that owns the Eurobond is the one that is lending to the government, and at maturity gets his principal. Credit rating is very important because when you are investing in a bond, don't just look at the rate of return. You need to understand the credit rating. So in the market today, you see that there are some bonds that are C-rated, like Zambia, but they offer high returns, like 40% yield, for example. While there are bonds like Federal Government of Nigeria, which is a B-rated bond, right? So the credit rating is the assessment of the credit worthiness of a borrower. So we usually have rating agencies like Fitch and Moody's that rate all these companies. The maturity date is when the bond is going to mature. So, for example, if the maturity date is 2024, 16th of April, like you can see in this illustration, that is the date that the bond is going to mature. So that means the time to maturity between now and then is about 4 years. The coupon rate is the promised interest rate. You know, I explained earlier that bonds have fixed rates. However, the most important thing, apart from the credit rating of the bond, is the yield. Because even though a coupon rate of a bond could be 9.5%, as you can see here, the yield is actually the real return on the bond. So that is what you need to pay attention to, because that is what that is going to be your actual gain on the bond, right? So for example, because this bond is selling at $95 per unit, the yield is 11%. If it was the other way around, if the bond had a higher price, the yield would be lower. So price and yield have an inverse relationship. And the price of the bond is what investors are willing to pay for the bond. Usually bonds are issued at par, but they a premium. So based on market conditions, bond trade below its maturity value or above its maturity value or at the same price. So for mutual funds, now you know I said that to do a direct purchase of a Eurobond, you need $200,000. However, for a mutual fund, you need just about $1,000 to be able to participate, because how mutual funds work is that they gather money from different people and put them together in a pool and invest. So that's why the minimum entry point is lower, even though it's the same type of securities that you are also going to enjoy. So at Afrinvest, we have our own mutual fund. It's called the Afrinvest Dollar Fund. The advantage of a mutual fund is that there's a fund manager for professional management of the fund. So you don't have to bother yourself with trying to manage the fund. There's a trustee that represents the interest of the investors. And then there's a custodian who safely keeps the fund. Now, one good thing to know is that because it's regulated by SEC, SEC can fire the fund manager. If for example, God forbid, Afrinvest is not managing the funds well, the funds can be moved to another investment house. So that also adds that extra layer of security of the fact that it means that if your fund is being mismanaged, you have a guarantee by SEC to always step in for you to protect you as an investor. Benefits are lower minimum entry. As I said, you need just $1,000 instead of $200,000. Professional management. diversification, because in a mutual fund, you are not exposed to just one security. It exposes you to several securities. So that means that it will have some corporate bonds in it, it will have some sovereign bonds in it, like you have different types of bonds. And then it offers yields above 6% projected. So for dollar equity, because my time is about to burn out. So for dollar equity, the difference between equity and fixed income is that for fixed income, as I said, your returns are fixed, right? While for equity, you own a share in the company, and the performance of your shares are based on the performance of the company itself and also the general market sentiments. So you see that in a time like this COVID-19 period, stocks are doing, they perform in different ways. Some stocks are performing abnormally. That means people are buying in spite of the fact that there's COVID-19 and the economic issues. While on the other part, some stocks are suffering because investors have a bearish sentiment towards them. They are afraid of investing in those companies. So you have to understand that there's a high possibility of making good money, and there's also a high possibility of losing a lot of money, right? So there are different investment strategies. You can invest for dividend income. There are stocks that pay you regular dividend. You can invest because of long-term growth. You look at the company, you feel that this company is going to do well in the next 5 to 10 years. So you take the bet on the company now. I'm looking at the long term. There's also short-term growth. So in times like this COVID-19 period where things are unstable, and stocks are moving in different ways, you can take advantage of short-term opportunities. And it also helps in diversification. Also, for minimum capital, you need just about $20 to start investing in stocks. There are a couple of houses that offer things like this, the likes of Bamboo Rice and all those kind of people. I'll just show you 2 slides, but I'm only showing you the juicy part of investing in stocks. You have to understand there's also the risky aspect. So if I'm giving you this, I'm not guaranteeing you that this is how it's going to turn out for you. But if you invested 1,000 in Microsoft shares in 2010, your shares would have grown by 382% to about 4,800 in 2019. Also, if you invested 1,000 in Netflix in 2010, your shares would have grown by 1,855% to $19,000 in 2019. So I hope I've been able to at least share some knowledge in the short time that I had. So these are contact details. If you have more questions for us, we have offices in Lagos, in Abuja, in Port Harcourt, and we're always willing to serve.
My question was not intended to.
So there's a comment section for questions.
I've posted a question there.
Yeah, it's because I was still presenting. I just finished now, so I'll be able to take the questions.
Okay.
So I'm checking. Okay, so I have a question from Martins. He says, is it possible to invest in Naira, then conversion is done by Afrinvest for dollar investment? So our contact details are there. We can discuss further on that. But right now, if you want to invest, you need to provide dollars. However, there are conversion options. There are also some that we're working on as a firm to be able to do it directly, like so when you bring in your Naira, through some of our partners, we'll be able to convert for you. Or it's a conversation that is better to have when you send us a mail. Our contact details are there. Can the presentation be circulated after the call? Yes, it will be circulated. If you did not drop in your email when you were registering, that's if you did not register formally, if you use the direct link to join, then you have to put your mail in the comment box so that when we are sending the email, you'll be able to get the presentation. So aside treasury bills and fixed deposits, what other short-term investments are available in the financial space? So we're trying to limit this conversation to dollar investments because this is a dollar investment program. or you can contact our email that is stated there. There are investments like commercial papers that are done in Naira that offer better return than than treasury bills and fixed deposits. Those are short-term investment. But for the purpose of this presentation, a dollar mutual fund is your best bet when it comes to short-term investments in dollars. For a Nigerian investor, do you need to have a domiciliary account to be able to invest in the Afrinvest dollar fund? You only need a domiciliary account to receive your coupon payments. That's if you want to, if you don't want your coupons reinvested. But as a first-time investor, you don't need a domiciliary account. You can pay in cash directly to our account, but we have a per customer limit of $10,000. So our contact details are still in the slide. You can always contact us for further discussions on that. Will daily fund quotes be published like Naira mutual funds? Yes, they'll be published as soon as the fund is in investment mode on a daily basis, because right now we're on subscription mode. That means we're gathering funds together. As soon as those funds begin the investments, you are going to get the prices are going to be published daily, just like Naira mutual funds. Is there an option contract in the Nigerian finance markets? And if there is, how can I access it? So the Nigerian Stock Exchange did a presentation, a few months ago about derivatives, about the fact that derivative contracts are going to start to be traded in Nigeria. So they had a symposium on it. However, I'm not sure if formally people have started taking advantage of things like this, like option contracts in Nigeria. For the Afrinvest dollar fund, I need to expatiate. Can contact us directly. Our email addresses are stated so that we can give you a more robust explanation. Aside the dollar fund, what other dollar-denominated investments do you have? So right now, the two main investments that we offer, we have three main investments. We have dollar fixed deposits. For the dollar fixed deposits, they require a minimum amount and also have a minimum holding period. So minimum amount is somewhere between $50,000 and $100,000, and holding period is at least 6 months. We also have a dollar fund. Okay, but you said apart from that, and then Eurobond direct purchases. So if you want to do a direct purchase of a Eurobond, for that you need a minimum of $200,000. We are also looking to more options in the future, but this is what we have at the moment. Okay, so where do we come in? Where we come in is the dollar mutual fund and direct purchase. That's what we come in terms of investment. That's the question. What is the average return for your dollar investment? So projected returns are between 6 and 7.5% net of fees. That's projected return. For someone who is abroad and wants to invest, how can it be done? That's very simple. Our account details are in UBA, and it goes through a correspondent bank, which is usually Citibank. So we'll send you KYC details and our account details. Just share your email address with us, or send us an email to the emails that are on the screen. Do we offer mutual dollar stock funds? No, we don't. Only fixed income. I thought SEC does not allow any Nigerian registered entity to invest in foreign instruments outside the shores of Nigeria. Kindly enlighten me. So Afrinvest Dollar Fund is registered with SEC. So yes, they accept dollar investments. And what they do is they will screen your proposal and see how you intend to protect investors, and look at the framework of how the investment works generally. So there are investments regulated and registered with SEC, and dollar funds are among them, dollar and euro bond funds. And it's not just Afrinvest that has, there are other investment houses that have these same funds, which are also registered with SEC. There's a question up there that I'm trying to pull up. How can I open an account? Just send us an email. Forms will be sent to you. What is the minimum for Eurobond? If it's a direct purchase, $200,000. If it's a Eurobond mutual fund, $1,000. What is the restriction of transfers on cash dollar fund? Can we deposit dollar cash? Yes, you can, maximum of $10,000. What is our management fee? 1.5%, but our return projection is exclusive of the management fee. So that means that the return projection of 6 to 7.5% is your net return. That's what comes to you. We've already taken our fees in advance on before those returns. Is there an app? So our app is currently in testing phase. It will be rolled out very soon. The email has been sent. So I put an email in the chat box. That's aml@afrinvest.com, apart from the one that is on my presentation screen. Can I pull out of the mutual fund at any time? Has a lock-in period of 180 days, after which you can pull out at any time. Looking for a long-term commitment. What is the business continuity plan against takeover by another company? So are you talking about as Afrinvest, or are you talking about as the constituent securities? That's the companies and the sovereign entities that we plan to invest in. Well, that is a very broad question. But to answer that, I'll look at the historic. So Afrinvest has been around for about 25 years right now. And so we have a long-term commitment to stay forever and continue to reinvent ourselves and increase our business lines. So currently we have investment banking, asset management, and securities trading divisions. So 3 different sub-arms of the company. So and in terms of protecting our customers, so that's why most of the investments we offer have custodial arrangements. So what the custodian does is that the custodian keeps the assets on behalf of the client, so that Afrinvest cannot use your money to pay salary or event of liquidation. Afrinvest, the money that you invested with us will not be counted as the assets of Afrinvest. It will still be counted as your own assets. So that's why we have a custodial arrangement. That's a custodian that is in charge of keeping our clients' assets. And I also explained in terms of the way funds are registered as such that SEC can move that fund to another investment house if the fund manager is seen to be breaching certain rules and regulations. So I don't think you have much to worry about. The difference between Eurobond mutual fund and regular dollar mutual fund, they are the same thing. The reason why we called it a dollar fund is so that we don't confuse people, because when you hear Eurobond, you think the investment is in euros. But that's not what it means. It's actually in dollars. So that's why we called it a dollar fund, just to make people understand that it's not in euros. Minimum investment, $1,000. Do we have a charting software for stock trading? If it's dollar stocks, no. If it's Naira stocks, yes. So we have an app for Naira stocks. It's called afrinvestor.com. Coupons are paid every 6 months. Is my capital guaranteed? Well, on a best effort basis, yes. But in extreme conditions, so because Eurobonds are fixed income investments, so which means that your returns are fixed. But remember, I told you something about credit rating. Of course, because the dollar fund is registered with SEC, we also have a minimum rating that we can invest in. So Like we have to invest in instruments that are properly rated, that have good credit worthiness. So that's why I said on a best effort basis, your capital is guaranteed, but there are very extreme conditions under which it's in Eurobonds you might lose part of your capital. What month of the year do we pay dividend? That will be communicated. I already have a form through Chris. Why am I expected to submit it? To Chris. You can submit it to Chris. Can dividend be rolled over? Yes. It can be reinvested. So I think I've answered all the questions. If we have more questions, please let me know. Can top-ups be made? Yes. You can top up $100. But the minimum investment is 1,000. Subsequent investments are top-ups of $100 and above.
Hello?
There's no deadline. It's just that at the moment, this is the first subscription phase of the fund. So it's good to invest as soon as you can, maybe possibly by next week. But subsequently, it's an open-ended fund, so you can always make new investment. Like you can always invest throughout the life of the fund. First phase is projected to close at the end of this month, or it might be next week. So do we have any more questions?
Yes, I have a question, please.
Okay, I'm listening.
Yes, I asked earlier in the chat box if this would be a good time, considering the increase and the surge in the dollar exchange to the naira. Do you think this would be a good time to invest in dollar-denominated mutual funds?
So you can look at it in two ways. In terms of the securities themselves, this is the best time to invest because the securities are currently undervalued. So yields are high. And that's why I was trying to explain to you that the yield on a 1-year Nigerian Euro bond is about 9%. Meanwhile, the yield on treasury bills is around 4%. So it's a very good time to invest in Euro bonds as an investment. If you have Naira now and you want to convert to dollars, that really is a personal decision. Why I said so is because there are two ways you can look at it. I've explained in my former in the presentation that the Naira has lost about 200% to the dollars in the past 10 years, and that the Naira inflation rate has continued to be in double digits compared to the dollars. So if you are looking at a long-term investment and you're just converting now, considering how rates have gone up, what you can do is a scenario analysis. What is the best rate that Naira can come back to? Like if Naira was to recover, maybe when CBN starts to put in more sales in the markets, that if they do, that if Naira recovers, what is your best case scenario, right? Because nobody can predict it. So if you say the best case scenario, for example, is that it drops to 400 Naira, what is it trading at now? 450. What is the percentage difference between 450 and 400, right? Just hold on, so that's practical. 450 over 400. That's about 12.5%, right? That's like, if you say the best case scenario is Naira recovers to 400, I'm coming in now at 450. That means that if that actually happens, you've 12.5% is what you have, in quotes, lost, right? Because you did not wait. But if you're a long-term investor and you have a long-term horizon, so you are looking at 1, 2, 3, 4 years, you are going to recover that money back because number one, your investment is growing, and number two, one way or the other, I'm not being a prophet of doom because I've just shown you the comparison. One currency is losing at an average of above 10%. Another currency is losing at an average of about 2% of.
Have you counted your 18?
Sorry? Okay, that's not for me. So when you do a comparative analysis of the two currencies, you know that there's one that definitely is always going to appreciate against the naira, and it's not because I'm trying to be a prophet of doom here. It's just I'm just using data, and that's why I give you 10 years data, so that it's not like I'm telling you just about last year or about it's a 10-year data I've given you, and if you use that to make 10 years projection, and you want to go in for the long haul, then you can do if it's a long, if you have a long view, or if you have a short view, then that's questionable. I have to review, because if you are thinking of doing it now, I want to invest, convert back in 1 month, that's dicey.
I have a question, please.
Thank you.
Yes, you're welcome.
When you're getting your dividend, do you do the upfront deduction of the VAT? I mean, in terms of taxation to the FIRS?
No. So that dividend repayment that you get, you are looking at it like shares. So what you are getting actually is returns on your investment, coupons, right? So that's like if you put like interest. So that is not going to be taxed. You are going to get it as it is. The only thing that it might be net off is, for example, transfer charges. That could be, but nothing related to. All the fees have been taken in advance before your coupon is paid. So someone said, I missed the part where he said the difference between Eurobond and dollar mutual fund. So I explained that the reason why we called it a dollar mutual fund is because we didn't want to confuse people. It's actually still Eurobonds, but Eurobonds, when some people that hear it, they think that that the investment is in euros. However, it's in dollars, so it's the same thing.
Okay, so I have two questions, please.
Okay.
Hello? Yeah,
yes,
so
I'm
the
listening.
The first one, your management fee, which is 1.5%, is
Yes.
it 1.5% of the returns or 1.5% of value of investment?
So is 1.5% of the value of the fund of which your investment is part of the fund, which is accrued daily. So that 1.5%.
Hello, I lost you there.
Okay, so sorry, just to add, there's no tax on unit scheme trusts. That's for the person that asked about the about the question. But we are already out of time. But there was one last question. I just want to take it before we close the session. What was your question again, please?
So I was asking, is it 1.5% of returns or 1.5% of the value of my investment?
1.5% of the value of the fund, but it is accrued daily. So that means it's an annual charge. So you have to divide it by 365 if you want to look at the daily charge, for example. Or if it's a 3-month thing that you're looking at, that means it will be 90 all over 360 times 1.5. So we're not going to charge you a flat charge as you bring your money in. It is an accrued fee. And that's why I said that the projected returns are net of fees, and that's between 6 and 7.5%. So I'm going to circulate the presentation. If you did not register with your email, you can send your email address on the chats. You can drop it on the chat group, so that we can have the conversation and we can discuss more and we can continue to talk. Well, I just want to thank everyone for listening to the presentation. I hope that you've gained something, and stay tuned. There'll be also more sessions guiding people on various type of investments which we offered by Afrinvest, different sessions on different types of investments like this. All right, thank you very much and have a nice day.